following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. There is Mr. Valentine has set the price. Folks, take a look at this first chart that I posted. It's from our good friend Norm Winsky. He was on the show yesterday talking about this very thing that was going to happen at 10:30, which, as we know from our friend Shane Smolian of wolftrader.net, that's Fed time when they do their quantitative easing. And as you can see, at that point, we hit an exact 382 retracement of the previous day's low. And we were also hit that exact number that he was looking at, as you can see, at 2174. Those different, if you watch the two red arrows, the red arrows at the top show you the time at 10:23 when all three of those aspects were happening. You had Mars parallel to Mercury, and then you had Mars parallel to Saturn, and you had Mars contra-parallel to Venus, or Venus contra-parallel to Mars. So those, when those came together, that's what happened, with that when it occurred. It also happened to be, right at a 382 retracement of the E-mini, which was not much, but that's all you get these days. So we'll just keep an eye on it as we go through. Now let's start out like we usually do with our DAX. Yesterday, when we looked at the DAX, you'll see this is what we were looking at. The market had gone up, to that ABCD pattern and then backed off. And then yesterday it rallied. Last night it rallied up into the 0.61. Yesterday rallied up into the 0.618 level. And then if we look at what's happening with the DAX so far today, you'll see that it is done. Let's just do it one step at a time. There we go. Here we go. And then we'll get this one up here and take a look at it. You'll see here that the DAX came up. We've been in a really tight trading range in the DAX after that ABCD formation finished up there at 10,755 for several days. And folks, that does not bode well for the bearish side, because usually after an ABCD move has been completed, you get a pretty good, retracement, and we haven't got much of a retracement. So we might be looking at more new highs coming. There's always that possibility, of course. Oh, by the way, I almost forgot the most important thing about Norm Winsky thing. He has a special going on. If you really want to learn some of this astrology stuff, he will teach you for free. And it comes with a money-back guarantee, believe it or not. But if you want to reach him, his phone number is 239-594-3939. And then one other thing, if you would like to hear him for 1 hour, you can go to the Denver Trading Group, DTG, Denver Trading Group, and you can get you can hear him for an hour, because he's going to do a presentation for Ron Rossaway at the Denver Trading Group. That's the largest trading group in the United States, folks. So, it's the largest, but it's not the quality of what we have here at TFNN. Okay, let's move on to some of these other markets that we're keeping an eye on. The one that's really it's beginning to be really interesting here is if we take a look here at the bonds. We were mentioning this a little bit yesterday. We were in this trading range. And you'll notice the bonds over the last 4 days made the 135 pattern. You see the three higher bottoms, and it's promptly rallied quite a bit. And it's the reason for the rally, folks, is not the fact, our rates are, when bonds go up, rates go down, correct? That's not anything that we don't already know. But the real mover of this, believe it or not, comes from Europe. And here is the daily chart of the 30-year bond from Germany. And as you can see, this has been in a really tight consolidation range for several months, and today has broken out to the upside. In other words, rates are going lower yet. Part of this reasoning is the fact that Merkel lost a big part of her constituency in the area where she lives. A conservative came in and basically took, I don't know how it works over there, probably like it does here, it's all BS, but anyway, it was not a good thing for Merkel to happen, whatever it happened to be. So just keep in mind that that's something that could affect our markets also, because you remember 33% of all of the European Union countries are at negative interest rates, so we don't want to really get involved with that, because we think we're going to see higher interest rates here, and with the Fed jawboning like they are now, there's something really big going on over there is internally. That's basically what it's all about. Remember, we have 12 regional banks. As Tom talked about yesterday, the 12 banks are operated independently, and everybody thinks it's a government organization, and it's not. Just because it's on Pennsylvania Boulevard, that's all baloney. This is a private bank for banks, and don't forget that, because that's a really key point to remember. We've had a request to take a look at Alibaba. That stock has been really strong yesterday, and so I do happen to know a little bit about Alibaba, because when Sarah and I were living in Hong Kong, this stock was traded very, very heavily. It was trading around, this was going back 10 years ago, but it was around 45 or 44, something like that. But it was really volatile, and we would look at the Fibonacci numbers on it, and it would hit them, real easily. But if you look here at September of 2014, when it first came out, it came out at $100 a share, immediately dropped to 82, but it made a perfect three drive to a bottom pattern over a 2-week period. It was just absolutely perfectly symmetrical. And then it went all the way up to 120. And on that day, when it hit 120, T. Rowe Price came out and said they had loaded the boat on Alibaba and they were going to hold it forever. And of course, from then it dropped 60% in value all the way down to 55. I don't know how long forever was, but my guess is they're still in that stock. That would be my guess, because they have no skin in the game, and that's the way they play those games. So you've got to remember, this is not a business of picking stocks. It's not a stock market. It's a market for stocks. So keep in mind that that's what that is. Now, that's what I recommend you folks do when you have a new issue, is wait for it, let it trade a little bit. Even with remember Google? Google came out in August of 2004, I believe, and it opened and went some ungodly number to 125 a share, which everybody thought was crazy. Who would buy, a stock that all they did was provide information? And yet, the stock backed off to a perfect 61% retracement in the middle of the next day, and then it proceeded to go to $200 a share in a matter of a few hours, and from there it never looked back. So watch the numbers. They don't always work, but many times when they do, they give you an idea that we're at a pretty good spot to look at. I wanted to show you. I'll show you the E-mini S&P right after this break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart of the E-mini S&P showing you the 382 retracement yesterday that came in at 1032, and we had those parallel and contra-parallel aspects that Norm Winsky pointed out. That was also exactly at Fed time, where Shane Smolian talked about the quantitative easing. So that was a really interesting point. But remember that that's the end of happy hour, or amateur hour, not happy hour. It's the end of amateur hour. That first hour of trading is when you really want to look at these stock indices, because they are influenced by several things, the hedge funds, mutual funds, and of course the folks that do this high frequency and algorithmic trading. So after that first hour, you have a pretty good idea of what you're looking at. The only time that I like to trade into that very first hour is if we hit a multiplicity of numbers at the same time. In other words, if we hit a 618 and a 786 and a couple expansion numbers from somewhere else, then I would have a really good idea that that's where I'd want to act. But that doesn't happen all the time right on the opening. So watch that first hour. That's key. And then if you want to take a mini course on astrology, Norm is certainly offering it, and it's you can't miss because it's a money-back guarantee. You can call him at 239-594-3939. And believe me, I do this because I like Norm. He has some great information. I don't make anything off of this at all. I have never done any of that sharing stuff over the years, and I passed up a whole lot of money, to say. By the way, speaking of passing up a whole lot of money, I noticed that President Clinton received $18 million from a university to use his name and promote his, on this online university. One of my college professor buddies here at the University of Arizona, during this time, this is going back about 10 years ago, they offered him $500,000 to use his name in the brochures, and he wouldn't do it. And, he still says it's one of the dumbest things he's ever did, but he really says that tongue-in-cheek because his reputation means more than anything else. Okay, let's get down to what we think might be the trade of the day for those of you that are the check is in the mail, Marshall. You flat got that right. So take a look here. We're looking at October cattle. We've been looking at cattle now for several weeks. from our good friend Rich Anderson. We've come down from 116, and we're at par now, so we're down 16 cents in cattle. That's a huge drop, folks. We don't see that very often. That is the equivalent to about seven large, $7,000, and now we're right at the 1.618 level, right around 99. And there's another one that comes in below that, right at 98. They've been down for 22 trading days, other than having a little 2-day up move 5 days ago. This market has been down almost all the time, closing lower, making lower lows. All the time is just it's just absolutely unbelievable. In fact, this almost ties the record like what we had for silver and sugar. I believe we're 22 days on the upside in silver and then 22 days on the downside in silver. So there's something to this. So keep an eye on cattle today. Right around the just a little bit below par, 99. Looks like it'd be about 99 even, and then you'd stop would have to be below 96. So that's a 3-cent risk. Probably the best way to do this is to wait for it to hit one of those numbers and then, make a reversal type pattern, and then you might have a better chance. But watch these cattle really close in here, because we have a lot of numbers coming due. And if you like numbers and you like patterns, this is, what's going on. However, we just got news. Hold on, folks. Before you do the cattle trade, we just got word from our good friend Duffy in the Tiger Den that the world is going vegan, following the footsteps of our supreme leader, William Jefferson Clinton. So hold off buying the cattle. What we're going to do now is we're going to switch and buy all the grains that we can, because if they're going to be going vegan, that means they're going to be eating corn, wheat, and soybeans. So we've got an absolute no-brainer here. Okay, Duffy, it's your responsibility, not mine. Anyway, I just keep a look on cattle. That's basically is what you want to be watching. We did hit 99.50 yesterday on the as a low in cattle, so I think we might make a little bit lower low than that today, possibly down around the 99 even, or excuse me, not 99 even, just a little below 99. There'll be something magical about that possibly, but there's a lot of numbers, and as we know, 1.618 is one of the things that we really like to look at. That's that 1.618 number is the really important one, because you'll take a look at that. So we've had a question to take a look at natural gas and coffee, and I really have no, I think KC is coffee, but I don't have any interest in coffee. I haven't traded coffee, cocoa, and sugar. I think I traded sugar once over the past 40 years, but I haven't traded coffee or orange juice or cocoa or any of those. The reason why, I'll tell you the reason why. It was in 1974. The market was actually, it was the high. The high was made in 73. I was in cotton, and I was also in some coffee. And cotton was limit up, and I decided to take some profit. I think I had 4 contracts on, and I told the broker to sell the 4 contracts, and I figured I was going to get filled limit up. I got filled limit down. I found out later, after, studying it a bit, I just happened to be right at the exact top of the market that time, and I got filled limit down. The difference was well over $4,000. I decided never to trade, that again. And almost the same thing happened to me in the cocoa market. And so I didn't do that. I've never traded orange juice because when I was at Drexel, I had met some of the orange juice traders in New York, and they were all related. They were all cousins or uncles, everybody in the pit. It was a family pit. So you don't need it. My God, you've got everything in the world. And, when I traded, we had like 24 commodities. Now you got, thousands of things you can trade. We never had ETFs. We never had overnight trading. We didn't even have prices. You had to get them from a ticker tape. So, things are a whole lot different. So you don't really need the exotic stuff, but it's much better than it was in coffee and cocoa and sugar, because it's electronic and it's not done with paper. And that was the problem, because they held the paper, and the stone tablets was pretty much what it was like, and that's the reasoning for it. But now we have a very, very fair system for trading, as fair as you could possibly see. The only caveat here is one word, and that is internet, because if we get hacked, May God have mercy on us, because that would be the ultimate. It'd be worse than a nuclear bomb, because we'd probably never, well, not never, but it would take a long time to recover from it. But we'll see how this all pans out. But we have so much technical stuff going on now that it is beyond my imagination of what they have going on here, and the fact that, well, I'm not going to get into the politics stuff. Okay, let's move on here. I want to talk one more thing about. I want to talk about silver and gold here, because that's really, where we got to watch this really closely, because we've had some really big moves. We're going to be looking. I will cover the natural gas after the break. I'll be able to put up the charts and everything, and we'll look at that. But as you can see here on the silver chart, yesterday we were able to make a 61% retracement of the high. And we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the silver market. As you can see, in the silver, we've gone up and made a 61% retracement, spot on from the high that we made several months ago. This has been a really big move coming out of this bottom that we talked about yesterday. Incredibly important bottom because of all the timing elements that were there that we talked about. The fact that each of the swings were down 37 trading days. So this is very important. Anytime we go popping through these numbers to the upside, equivalent to 2020 in silver and 1362 in the gold, that would tell us that we're really probably getting ready to make a whole big leg of well over $100 in gold and probably a couple dollars an ounce in silver if we do that. So that's the key. Now, if we take a look here at the gold market, you'll see here that we're looking at pretty much the same thing. I've drawn in this little tiny ABCD pattern, as you can see. That's what I'd like to see happen. I'd like to see a nice little ABCD formation like this over a period of a couple of days, maybe back off $30 or so. That would be the one you really want to get into if we do get that. So I put that. I show you for your purposes so that you might want to, follow it yourself because, I'm only on here an hour a day and you don't need me to hold your hand anyway because you've got a lot of smart people in the Tiger Den that give you some great ideas. But anyway, that's one of the things that I would be looking at in the gold. So that's the key thing that I'd be watching. Okay, now as our request, we're going to take a look here at natural gas. And if anybody is qualified to do anything about natural gas, it has to be me. This is what we were looking at last week. As you see, we had that 135 pattern form. That pattern failed as we broke out above the 3-point, and then immediately you've gone below that trend line. Once you go below the breakout of that trend line, folks, that's a failed pattern. And what this means is most probably you're going to be coming down to test the 262 level in the natural gas. That's what it looks like to me. I mean, there's never any 100%. But remember, when those trend lines are broken like that, and then we go back below it, that's classical technical theory, and those are the ones that make it really important that when these patterns fail, that you have to literally get in and be able to understand that you have to get out of the way. I mean, because the pattern is failing, and there's really nothing else, that you can do about it to make that. Now, we're also going to go to Starbucks right now. We're going to have a cup of Joe. We're going to take a look here at coffee. And believe me, I haven't looked at coffee in a long time. These are I'll tell you, the last time I looked at it was way back in June for somebody, probably the same person. But you'll notice the 20-minute lines that were there. There were two of them. Both of them led to really strong rallies. Those are nothing more than fulcrum points that Jim Twentyman worked on. You'll notice the 135 pattern back in January, February, and March. Folks, watch that pattern. That's a really big money maker. I put that in my first book, Astro Cycles, The Trader's Viewpoint. It was a pattern that was given to me by Roy Longstreet and his son Bill. They asked me not to put their name in it until after he had passed away. And after that, then I certainly did that. But it is a 135 pattern. All I did was to show them how the ratios between 1, 3, 3, and 5 all fit together. And that gave them a mathematical point to look at it. They could see it technically, but they couldn't see it from a mathematical basis until they looked at the Fibonacci numbers and how they fit. And they fail some of the times, as we saw with the natural gas, but you don't have to risk very much, and that's the whole key, to watching these, is you don't have to risk an arm and a leg as we go through this. Okay, let's take a look here, and we'll get on to one of the other things here. Someone asked a question about. The question was about the corn market. Here's pretty much what we've done in corn recently. I am getting ready to get ready to be a buyer of corn if we back off about 7 cents. This market has done just about everything that you could possibly do. This is a 4-hour chart. And of course, if you get the 24/7 newsletter, you'll see that we covered this very extensively looking at weekly charts. And we think we've made a major bottom here in all of these grains, including the soybeans, which Mr. Z in the room is a master at trading it. But, we looked at this just the other day, and now we're up about 20 cents in soybeans off of the exact 786. Here again, you see that 1-3-5 pattern. The 1-3-5 pattern is you have higher bottoms. That defines a trend. So if you have higher bottoms, you're in an uptrend. If you have lower tops, you're in a downtrend. It doesn't make any difference what time frame you're looking at. That's how you're supposed to define trend. There's no other way to do it than that. So remember, that's what I think is the most important thing, to really look at. Now let's get to, well, that's it. I'm done. That's all I had for today. No questions? Okay, we'll see you all tomorrow. Hold on, we'll keep this up here. We'll keep momentum going here. Remember, momentum is nothing more than a 2-touchdown lead. All right, let's take a look here at the euro using a 4-hour chart. This is the most actively traded thing in the world, folks. Nothing comes even close to it. I mean, nothing. As you can see here, we have the 1-3-5 pattern again. And now what we're looking at now is a market that's making an A, B, C, D corrective move. And that would take us up to this area of around 112.80. We're trading at around 112.50 right now. And we had that big move yesterday, which was off a major 78% retracement. That was also a spot where the U.S. dollar index had hit a perfect 61% rally from the other way, and that's pretty much what you're looking at as you see some of these things unfold. We'll look at this dollar index yesterday because you'll notice that yesterday we rallied up to the 95.90 level, which was a 61% retracement of the previous level. And you'll see that now we've come down and we are testing 60 or 78% retracement on the downside, down around this 94.50 level. But we did have that really wide range bar down, and that could be the whole key. Folks, this chart to me is the most important chart that we have to look at, because this is real money and it's a US dollar. And if you'll notice up there where we had 5 ratios present, we had a 618, a 786 contraction, a 127, 1.618, and 1.618 expansions. We had an ABCD. We had 5 ratios at the same price plus an ABCD pattern. This was screaming to you that this is very, very important. The last time I have seen this many things coming together is when the British pound was at 158.50. And we put out a major sell at that level, and of course it went down. But this is when you have all these things coming together like that. These are the cycles. I don't know what they are. All I know is that these expansion numbers don't stop there by accident. That's the whole key. Well, just a minute. We're trading in the market, and all of a sudden we are looking at the DAX taking out the highs of the day. Let me be right back after this few words.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, as you can see here, the German DAX, after making that 382 retracement yesterday and going sideways for so long, had a strong bias to the upside. And, of course, we have taken out the highs. That sets up a possibility of another ABCD, or at least a 1.27 expansion of the range over the last day and a half. So that level to watch in the DAX would be right at 10,800. That would be very similar to what we're looking at here in the E-mini S&P. That level that we'd be watching would certainly come in. I think I've had that in here. Just let me, I'll put it up here 1 second so we can look at it here again. You'll be able to see that the number we're looking at here in the S&P E-mini would be at 2192. That would also be a new high. Remember, each time we've made a new high, it's led to a sell-off. That happened, back on the 14th of August. It happened on the 23rd of August, and it might happen today. So, I don't believe this market is breaking out to the upside from a lot of different reasons, because if we look at the New York Stock Exchange Index, it's not even close to the old high. Now, the reports are telling you that the NASDAQ is making new highs. And in fact, if you look at the futures, they are not doing that. It must be the cash that's doing that, because what they're reporting is certainly not what we see in the market. So we want to watch this very closely. Someone's asked a question about Bill Ackman buying the Pershing Square, a hedge fund buying a 10% stake in CMG, Chipotle Mexican Grill. And that I don't know anything about. I mean, those guys, they have a whole different orchestra that they play to. I'm just a technician, folks. And first of all, I do not like CMG as a place to eat. I've had 2 meals there, both of them where I thought were overpriced and mediocre. That was the way I did it. But I didn't die, which I was very positive of that. But I just don't see it as a $435 stock myself. But that's just my own personal opinion. So, and you know how much opinions are worth, right, folks? Everybody has one, and it usually smells. So just keep that in mind as we walk through this. I think the thing to keep. We have to catch up here with the Hang Seng here, because we have had a situation where we've broken out above the level in the Hang Seng that we were looking at, but it's now starting to come back and retrace the the level of where we were. In other words, it's getting back below that trend line. Let's put that up here so we can all be on the same page here. The number we were looking at was, let's just put this up so we can see it, because it's very, very close. It's within less than 100 points from where we're looking at this right now, because we got up to 23, so it'd be 400 points. Yeah, from this level here, we got to 23.7, and we closed down yesterday after being up Monday and Tuesday, down on the Wednesday. So now all it takes to turn the Hang Seng down is one good, strong down day, and that would be a situation where the market just broke out of the consolidations, much like we've done in some of these other things, and yet it doesn't go anywhere. Therein lies the whole premise of what we're looking at. Now, if we take a look here at the cash market in the S&P, I wanted to do this yesterday because it did exactly the same thing that the futures did. You'll notice that it came down and went right down to the 382 level. And again, you'll see if we get up around this 219 and change level, it's going to be nothing more than another consolidating, ABCD pattern. So that's what I'm seeing. There's just no volume in the stock market. Yesterday, folks, the VIX index, with everything up, we had a new high in the NASDAQ. That's what they tell us. We had the S&P was up, the Dow Jones was up, the IWM was about unchanged, but the VIX index was actually up on the day. That I found very hard to believe. The other one that I find hard to believe is the fact that these high-grade bonds, people are continuing to buy them. They're making new recovery highs now as our bond market, has rallied a little bit today. But you can see yesterday and both Monday and Tuesday, and again on Wednesday, you've had a higher high in these high-grade bonds, and that is really against economic theory, because you want to be concerned on the return on your money and not the return, be concerned on the return of your money. Get your capital back. Don't be concerned on your money, what kind of interest you're going to get. That was, the highlight of Bernard Baruch's book, his autobiography, My Own Story. He said, always be concerned on the risk and not what your return is going to be, because risk is what you can actually going on. Someone's asking a question about Ackman's record. Lately, it has not been very good. He had a down year last year, but, overall, you don't make a couple $1 million like that young man did without being pretty good. And he is pretty good, because over a period of time, he's done very well. I don't think anybody's done as well as Stevie Cohen. Nobody is better than him. I mean, he's one of the best I've ever met or even, talked to. He's just a really great guy. Another guy who's really good that no one even knows who he is Jeff Vinik. He used to be with Fidelity 35 years ago when I first met him when he was a young kid, and he was an excellent trader. And, he, I think, what's his name? Soros gave him like $50 million, and then he quit Fidelity, and now he owns the Tampa Bay Sharks, which is the the hockey team down in Tampa Bay, and he's building a huge home in St. Armand Circle there in Longboat Key. And so he's really a tremendous trader. But you don't know who he is. I mean, just a really nice guy, keeps a low profile, has 4 children, and just likes to be left alone now and doing his own thing, which is really pretty good. You're right. Longboat Key is really one of the premier spots in Florida. There's no, I don't think there's in this, but there might be something better, but not from our standpoint anyway. We love that place and all the people in it. Okay, let's get back to a couple of these markets that people have asked about. One of the things, a little tiny bit of concern here, and I just wanted to bring this up to you. This is the chart that we, time out. There we go. Just I hit the wrong button again. If we take a look at what happened to platinum, you see we bottomed here. As we talked about last week, that we thought we had a major bottom coming in gold and silver. That platinum was right at a 61% retracement, and now we rallied. We got up to above 1,100, but it was exactly 38% from the high that we made back in August. So, even though we've had these big moves in these gold and silver, they got to keep going, folks, because, the trend is still down in these. And, we've seen this happen before where you've had these really sharp rallies, and yet the market, really doesn't do very much. And that's what I think is the most important thing to keep an eye on. So I noticed the cattle opened a little bit lower and have rallied a little bit. If you were able to take advantage of that, you made a few bucks. So, put that in your pocket and give some to the poor. 877-927-6648.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to take a look here at the New York Stock Exchange Index. And as you can see, we're a long way from making a new high, even though we've made new high in the S&P and in the Dow and the NASDAQ. The overall stock market has not. And when you stop and think it's been in the same trading range, for the last 5.5 weeks, this is usually not very good action. But that doesn't necessarily mean that this thing can't go higher, because as we've seen in some of these other instances, they'll go higher. And whether it's related to quantitative easing or not really doesn't make any difference. The market goes higher because they go higher. When this thing finally does turn over, and it will turn over, maybe not necessarily in my lifetime, but when it does, you're going to get a pretty good idea of what level it's going to go to, but you'll have some great shorting opportunities because, most people do not understand the short side of the market. Raise your hand, Larry. Okay, that's one. But you've got to be able to, try to find these patterns and see where you can get in without, risking, an arm and a leg. And that's the real key. So keep an eye on two things today, folks. One is the cattle at that 99 level. The other one is to keep an eye on the euro versus the U.S. dollar at that 112.80 level. The risk there would be about 40 pips max. And then also keep an eye, of course, on the S&P in this area around 2185 with a stop above 2192 because we are in an area where it's got a lot of distribution. It also could be support. So above 2192, then this would certainly be wrong, but that's what we would be watching. And of course, if we get the bonds, Christmas bonds up around 172, that would be an area that I would be looking to be a potential short seller of. Those are the keys that I see for today. We'll recover these and reissue those tomorrow. Remember, Norm Winsky's on the Denver Trading Group today at 2:30, I believe, Eastern Time. Just go www.Denver Trading Group and you can listen to him.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.